Welcome back, folks. We got a great guest for you today. Mr. Beeks came in the market out here today, and we're talking about Mr. Beeks. Of course, we're talking about the futures market. Our guest today is Sal Gilbertie. Sal, folks, is the president of Teucrium Funds. Now, check this out. This is it's really so cool. You know, in the last, I remember the first time that they, the Qs, basically when the American Stock Exchange, I had actually the president of the American Stock Exchange on when they debuted. And now we're basically 14 years later, and what do you have? Bottom line is that you have ETF structures that you can trade corn, soybeans, sugar, and wheat, and then all of those in together inside the TAG product. Those are ETF structures that trade inside the equity markets right now. We have Sal on. We're going to talk about how they trade, and of course, we're going to talk about Mr. Beeks today. Sal, welcome to TFNN.
Thanks, Tom. Happy to be here.
Yeah, I'll tell you, man. It was quite a report this morning, right?
It was quite a ride. It kind of surprised investors. I don't think anyone anticipated yields to go up in corn and soybeans, but they did. And so that took us for quite a ride.
Yes. Now, folks, what happens with you know what's so cool, Sal, about ETF structures? I remember, you know, and it's really wild how the market has changed in the last 20 years. And you probably just heard me. When the Qs first came in, I had, the first day they were on, the president of the American Stock Exchange, that's who owned them at that point, was on. And it's so cool because at that point what had happened is that you could go long and short. And that was the first time, because you were going back so long ago, folks, you only could short on a downtick. But when folks want to either go long or short, let's say corn, okay, bottom line is that you can do it with your product.
That's right, you can. In fact, that's why we developed these products and listed them on the New York Stock Exchange. You know, I come out of the grain world. I started at Cargill in 1982, a long time ago.
Okay.
But most people still, even institutional investors, many of them are not allowed to trade futures. So, you know, primarily, I think 99% of the audience out there of most investment programs, most investor target audiences, they're actually trading stocks and not futures. And so what we did was develop these things. These ETFs go up when the price of the underlying commodity goes up. They go down when the price goes down. They're unleveraged. They're transparent. As with all exchange-traded products, we must post our holdings every day within 24 hours on our website. So you know what you own.
Right.
It's safe because it's a secure product. It's not an exchange-traded note. You don't have any credit risk. You actually own a piece of a trust that actually owns, say, corn futures in the case of Teucrium's Corn Fund.
Yes.
Or wheat futures in the case of Teucrium's Wheat Fund. We got great tickers. Corn, C-O-R-N, comes right up on your screen. Wheat without the H, W-E-A-T. Soybeans, S-O-Y-B. It's pretty simple.
Hey, now let me ask you, this is what, you know what's so cool here, folks. If you know, I happen to trade, you know, futures also. But what happens in futures, folks, okay, is that you don't want to get caught in basically a limit down situation if you're long. You don't mind if you're short. And that's what's so cool also about the product. You don't have to worry about a limit down or a limit up if you're on the wrong side of your position.
Well, you can always get out. They're very liquid, and the interesting thing about our funds is the few times that futures have locked limit up or limit down since our funds have existed.
Okay.
For instance, the Corn Fund, whatever date it was, generally the end of a quarter, there are big ag reports, and they often cause a move that's limit up or limit down. The Corn Fund keeps trading as a proxy for futures, so it holds 3 different futures contracts within it. The traders and arbitrageurs know what those contracts are. So even when those contracts are frozen because of limit requirements, limit up or limit down on the futures exchange, traders kind of guesstimate where the futures are going to be, and our Corn Fund has actually predicted the futures open the next morning to within 0.1% when they're locked limit.
How cool is that, man? That's like the option market, man. I mean, you know, I've always, you know, it's just amazing how accurate these can be, man. That is so cool. Well, you know, it's intriguing about that too, is that helps people dramatically because of the fact that the market makers themselves can come in and out, and the public can come in and out.
That's right, and we've actually had market makers call us, several investment banks call us, thanking us for listing the product, saying it's another good tool in their arsenal for hedging. Now, most people, if they're directly in the grain markets and you can participate in futures, you probably should. But for investors looking for exposure or looking to trade, these are products that are very helpful, and we like to think very easy to use because they're right there on the New York Stock Exchange, and you can use them in any stock account.
No doubt. Now, talk to me about the Teucrium Wheat Fund. And the symbol there, folks, is WEAT.
Yeah, it's a good fund. I like to think so. It really gained some traction last year when the Ukraine problems started. As many people may or may not know, the Black Sea is a point of origin, a major point of origin for grain exports, in particular wheat. So when there became some uncertainty politically last spring,
yes,
our wheat fund kind of took off. It went from 3 million AUM all the way to almost 30 million AUM in the matter of a couple of months. The good thing about all of these funds is that they're as liquid as the underlying futures. So if you were trading the wheat fund and it may have traded, whatever it trades, 90 or 100,000 shares a day on average.
Sure.
But you want to buy, say, 1 million shares or sell 1 million shares.
Right.
You can buy or sell these things. As long as you do it when the futures are open, you can get as much liquidity as you want because a market maker is going to arbitrage the futures into the stock price. And so ETFs liquidity is virtually unlimited so long as an investor is really intelligent about how they execute and when they execute. The most important thing, two things probably for investors to understand with any ETF, not just Teucrium's grain ETFs, is never use a market order. Yeah. Especially in ETFs that aren't trading millions of shares a day, yes, because that kind of confuses the machine. A machine is what's making you the price. It's programmed to figure out where it can buy the underlying, in our case, wheat futures, if you're talking about the wheat fund, okay, and where it can sell you, say, the wheat ETF. And, it's programmed by a human. So that human being is going to program certain amounts of money that he or she wants to put at risk, okay, and then they're going to program the machine to shut off and call for help. So a market order kind of short circuits that entire process because a market order is an attack order. So investors really need to be careful with market orders because humans don't make markets anymore. Machines do, but humans program those machines, and it's humans who have their capital at risk. So the important thing to remember is find out what the real value of your ETF is, and there's a neat little trick. There's something called the indicative value. Yes. And so I know that off the top of my head on Yahoo, if you type in that little symbol on the top of the letter 6 on your keyboard, sure, and then type in your stock symbol. So in our case, it would be WEAT for the wheat fund. Right. And then you type in .IV. That stands for -IV. So yes, this is for Yahoo Finance. Okay. If you did that, so that little symbol on top of the letter 6. WEAT-IV, that actually is updated every 15 seconds, computed by the New York Stock Exchange, and posted for investors' benefit so that they can see what the actual value of the underlying futures, while they're moving, indicates that the value of the actual wheat ETF would be. Now, that's not unique, again, to Teucrium funds. That is for every single ETF that's out there. And investors, especially when they're trading thinly traded ETFs, because ETFs, as I say, depending on their underlying benchmark, they can be as liquid as you want them to be. And the whole point is make sure you know what the value is. It's updated every 15 seconds. Absolutely. Fast markets Sal, like we saw today might be
we get a quick break. You stay right there, all right? We're getting a great education. You stay right there, folks. Sal's giving us a great education. He's going to be right back, continuing. Welcome back, folks. We are getting an education of a lifetime today from my man, Mr. Sal Gilbertie, folks. Sal is the president of Teucrium Funds. Teucrium, he has funds that trade in the NYSE, corn, soybeans, sugarcane, wheat. Corn is the symbol C-O-R-N, soybeans S-O-Y-B. Sugar rather is like C-A-N-E, and wheat is W-E-A-T. As we were coming into the break, Sal was explaining to us, folks, how, number one, you should be putting market orders in, and we're talking about all ETFs now. He's been, Sal, number one, thanks so much, man, for walking us through this, because this is so cool. And what I've put up on my Bloomberg, and I'm showing them your wheat ETF right now, right? You know, because we were talking about the indicative index, and it's really crucial that folks understand, you know, how these ETFs get made. And you had been talking about how during the market hours of the futures, that's when they're liquid beyond belief. And what I'd love to talk about right now is how these get created and destroyed, meaning the ETF structure in general.
Well, the ETF structure in general is actually pretty simple. We didn't invent it. We kind of just inserted grains into the envelope.
Yes, no, I understand that, but so the folks can understand, which is really cool, because as you walked us through, you know, how they work, I just like people to understand that you know, they're made immediately and they can be taken out immediately, right?
That's right. Well, there's what's called a continuous creation process. So we're actually technically, legally, in a continuous IPO process.
Yes.
And what that means is that as many shares as are demanded by investors can be created immediately. And how it works is broker-dealers are arbitraging between, say, wheat futures and the wheat ETF.
Yes.
So if someone wants to buy a million shares of the wheat ETF,
right,
those shares will be created and sold to them by a broker-dealer. Broker-dealers have a short sale exemption rule. It's either 7 or 10 business days where they actually don't have to come up with the shares in order to short sell them, and that is to create good liquidity in the marketplace. They get that exemption so that the markets trade smoothly. And what they will do is sell those shares to an investor who wants to buy them. The shares don't exist yet. But then they come to us and do what's called a create. And creation baskets consist of 25,000 shares at a time.
Yes.
And so in multiples of 25,000 shares, they will buy those shares from us because investors have paid them the money and they've sold wheat shares to the investors. They then pay us that money. We invest it immediately into the wheat futures, and then we grant them those shares. Those shares are created. Vice versa, it's called a redemption when an investor wants to sell.
Yes.
And an investor can sell as many shares as they like. Broker-dealer will buy them and then redeem them. Now, you can't redeem a fund out of existence, but you can redeem as many shares are out there up to a minimum amount.
Isn't that, I know, man, I really, folks, this is so cool, you know, having him walk us through the whole structure, you know, and it is that simple, too. I mean, you know, it's interesting because I've got questions before, Sal. You know, folks think, well, they can mix up the aspect of how many, even you know, any ETF that are made versus sold, okay? And so it's really intriguing how the process works. And in your case, because we're talking the grains, folks, okay, what's important here is that when you're trading these, as Sal said at the beginning, you want to be trading these products when, in fact, the futures are open. Would that be correct, Sal?
That's correct. You can trade them any time, but what you want is to allow a market maker to put on as perfect a hedge as they can possibly put on, which gives you the most efficient pricing. So you as an investor have a vested interest, if you will, in trading when the underlying benchmark of any ETF is open. In our case, that would be when grain futures are open or when sugar futures are open in the case of our cane fund.
Right. Right. Now, talk to me about, you have, it's called, well, the symbol is the agricultural fund. You know, this has a few different, I believe it has all 4 of them inside it, right?
It does. Tags. It's called the Teucrium Agricultural Fund. It's Teucrium Ags is what the ticker stood for, or stands for. And what it does is it equally weights the money invested in tags 25% into each of our underlying funds on the New York Stock Exchange. So in our corn fund, in our wheat fund, in our soybean fund, and in our sugar fund, whose symbol is cane, as we've said.
Yes.
It's kind of like the old DBA. It wasn't meant to replicate it, but the old DBA, before it added all those commodities and became a multi-commodity agricultural, you know, very broad-based index.
Sure.
Tags is much more focused. If you want what we call the big 4. So you know, corn is the largest agricultural product in the United States. It's the largest agricultural product in the world. Some people can make an argument with coffee depending on the metric they use, but the bottom line, corn, wheat, soybeans, and sugar are the big 4 ags. Those are the ones people look at. Those are the ones when you do correlation studies over long periods of time, say 20 years at a time, correlate less with the S&P 500 than, say, precious metals and energy. And so, one of the reasons we brought these funds to market to the New York Stock Exchange for easy access to investors is because most people that we find when we speak with investors, they have precious metals as a diversifier or an alternate currency in their portfolio. They have oil because they understand energy. They understand that energy touches every aspect of their lives. But they didn't have agriculture, number one, because there are no other agricultural products out there, at least not collateralized ETFs. There are a few ETNs that represent the ags. And corn, let's use corn as an example. Corn in the gas station, let's say.
Right.
If you pull into a service station or whatever you call it, in the United States, wherever you live, when you fill up your average SUV, you're going to use about a bushel of corn just because of the ethanol content. In the United States, that's corn's #1 use. Globally, that's corn's #2 use. What most people don't understand is that corn is #1 use globally is for animal feed. So if you, while you're filling up, walk in and grab one of those beef jerky sticks or a chicken taco or whatever's a meat-based product, that's corn's #1 use.
Wow.
If you grab something out of the cooler to drink, it's likely sweetened with corn syrup. That's corn's #3 use globally. If you are taking notes during this phone call or signing a credit card slip to pay for all that at the service station, that's corn's #4 use, starch, which holds all the paper together.
Really?
So,
wow.
Yeah, if you are in the modern economy on planet Earth, corn touches your life every single day.
That's amazing, man.
And so, most people, back to the investment theme, most people include energy in their portfolio because they understand it. And so they believe energy touches everything, and it does. But guess what? So do the ags.
Oh, big time. And as you said, people are looking to be diversified. I mean, and when you look back, there's no doubt that the bottom line, folks, is that, you can get these inside your portfolio. They're ETFs, bottom line, they trade just like stocks, which is pretty amazing,
It is, and we're happy to have brought the product out. It's very exciting, especially I remember when the drought kicked in right after we listed the corn fund. We actually were receiving calls from farmers who said, I just came in from harvest, I've had a terrible year, and I'm investing in your corn fund through my IRA account. Or, it was amazing.
Oh, that totally makes sense. Well, listen, thank you so much for the great education. Thanks for coming on, and we look forward to having you on again, Sal.
It's a pleasure, Tom.
Okay, have a great one, man. Have a safe one. So it's Teucrium funds, folks, okay? And Teucrium is spelled Teucrium. You can go to their website. Bottom line, corn, soybeans, cane, wheat, and then, of course, the tags. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials flat. NASDAQ was up 7. S&P's up 4.5. We're going to be right back.